What's up, guys? So I'm just doing my review right now. I'll walk you guys through my trades real quick. So we had a sell off at the open. We dropped about 40 points in 30 minutes, and we'll talk about two reasons why that might have happened. If we're looking, this is actually someone else's analysis, but I did really like that. If we're looking at the range that we're in on the 15-minute chart here, we Monday was the bank holiday, so that was a really slow day. Tuesday, we set a new high and low of week. Wednesday, so now we have our range set, right? This to me, this would be the bottom of the range at 118, and then the top of the range would be 58. So Wednesday, we have a really clean bullish day. We pop out the top. However, we end up closing back inside the range to end the day. And then the sell off kind of slowly trickles in on the overnight. Now, what he was saying is this is a sweep of the highs and then a sell off back to the lows. If we're thinking about this from a basic range trading perspective, we want to be selling at the extreme highs and buying at the extreme lows. So that would be a sell um, from the high, and then you take it down to the lows. I don't necessarily trade on the 15-minute chart like that, but that's the general thesis. So if we look at that from a more technical perspective, we can also come back to the news today because there was some news about tariffs. I'm just trying to find it here real quick. Um, right before that. Yeah, so there's Secretary Lundwick saying, "I don't see tariff policy causing a recession." And then there's just a few other little tariff news about recession. Clearly, the market didn't like that, and we know that tariffs have been overall a net negative on the market since Trump was in office. We haven't seen much tariff news cause a pop, whereas mostly a reversal. And that's just because it's going to cost US companies more money if we put more tariffs on. So, okay. So we have the sell off at the open, news based, technical based. Who cares? Now we have the low of day set in. We have a nice retracement. Anybody who's taking this, they're just getting induced buying out or selling at low of day because they missed this move. That's just the amateur trade. Now, I personally have stepped away from taking plays right at the New York VWAP as I trade much better trading from the high of day and low of day VWAP on TradeZella. I playbook all my trades for the last year. I have about a 77% win rate on those trades. So I have much more and only like a 50% win rate at New York VWAP. So with that being said, I have much more confidence in the shorts than the longs here. And so this was my first trade. I took this break of low of day VWAP. Also, it's really important to note I sold 1 minute after this candle closed. So I don't know what happened. My light just turned off, but yeah, I sold 1 minute after this candle closed. So I was in it for this move basically. But look, when I trade this kind of trade, I know there was orders at 6,100 from Bookmap. And I also know that some of my best trades are when we set the IB low or high. I take this trade on both directions. We get a retracement either to the low, the opening range low, or the daily, and then we break the high of day, low of day VWAP, and I'm targeting the first break of the initial balance. We know the initial balance gets broken like 90% of the time, if not more, if not more than that. The initial bounce always gets broken. So I was targeting the initial bounce breakout and the 6,100 orders. There was like 600 orders there. That's a pretty good amount for ES. Now I didn't get there. And I ended up taking a donut on this trade. As you can see, I locked my stop and I took a donut. I locked my stop right here on this candle because I was thinking I don't want to trail the stop here because the trade is still valid. To be honest, the trade is still valid until the stop is hit. However, I'm not willing to be up 800 and then let it turn into a net negative 800. That's not how I trade. So I was, comfortable to take the risk off the table. And something that I'm thinking about now after this is this wick right here, the way we set the IB low after the sell off. Maybe this should be a level of take profit instead of waiting because as you can see, we bounce off IB low, again, bounce off IB low, and then now we start to pull higher. So I'm not saying that today is going to end bullish, but I'm definitely saying it's not screaming bearish price action to me. I try not to use the stocks in correlation. You really want to trade your asset most often. But if we look at Nvidia made a low and then it has continued to fail, making new lows, and now it's all the way back in the range. So is that a predictor of what might happen on ES today? Potentially. Now, so I took a break even on that trade. Then I got right back in, and this is where it's like it's not my best setup, but I can see the trade is still valid. I'm feeling a little bit of frustration that I missed out on the move. So like I was up 800 and then I went to break even. So I ended up closing my trade here. I scalped it for a few points. We could see on Top Step I'm up like $300 today. So not that much, but in the long run, I was just writing about this in my daily report card because you know, I'm working really hard on just trading the proper process. I can't let days like today get me frustrated. That would only lead to negativity. I need to take it as a learning opportunity and say, let's stretch it less, maybe. But there are other times where I know it is going to burn my profits if I end up taking profits before the IB low or high is broken. So I've taken this a VWAP to IB break many times, and I know that in the long run this will pay. I'm ending my first session green, stack the small wins, and be happy. There will be more trades today. You know, I'm just saying, like, I don't want to let the frustration of taking a donut, spill over into the rest of my trading session. I could be cognizant of where the wicks were formed. Yep. Let's see. In the recap, this is just part of trading. And then I'm left thinking after this trade, should I be locking the stop loss? Is that the right decision? Plus, 800 in profit, but then be taking a larger loss. I didn't want to bail early. So, this was 800. So I didn't want to lock the stop in profit because that was not really invalid. Now looking at it for the rest of the day, if we do again look back at the 15-minute chart, it's extremely range bound, but something that is let's actually take it to the 1 hour, because something that I always try and do when I trade is find where's the higher low. So like if we're looking at this market, there's a higher low here, then there's another higher low here, a higher low here. Then we get I wouldn't call this I guess this is a lower low, but it's a lower low if you're looking at it really zoomed in, but a higher low looking at it from a more zoomed out. And you can see we have these big sell-offs, or like not big, but we have large days where we just make a move, and that tends to be our higher low. You can see it perfectly here. We drop, and that's a pretty aggressive drop, and then we recover, drop, recover, drop, recover. And then today you could say, if we look back today and we end up closing in the 30s or even 40s, you'd say that follows the same pattern we've been having before, that we dropped and then we're continuing higher. And yeah, so another thing that I just want to talk about with Edgeful that I think is a really big stat. Whenever we have something that's 70% and above, I'm always taking it into consideration and thinking I'm going to put more weight on this statistic than I would another statistic. So we have a gap. We still have this gap to fill, and it's at 63. You can see we closed here. That's where the gap is. We don't even try and get that at the open today. But I'm on the West Coast. We know that 82% of the time gaps fill before 9 o'clock Pacific Standard Time. Now it's well past 9, and this would give me a short bias going into the rest of the day. Even though the initial balance low hasn't been taken out, I can use the gap fill stat as a way to give me a bias. And it's difficult because you really do want to trade what you see, not what you think. And using that statistic, I think that would, say I'm trading what I see, not what I think, because I'm using the data to back my entry. If we go and look at NQ, NQ actually looks even more bullish. I'm not a big trend line guy or chart pattern person, but chart pattern's bad word, but like I don't know what that is, but that looks bullish to me. That looks like we're failing to make new lows. Low of day VWAP is barely holding. New York is now getting taken. I could see a long setup present on NQ if we can break above this 22,100 level and then find another retest of the daily. One of my mentors, Evan Dyer, he always talks about this. He says, don't so if we have a sell-off day, you never want to buy the first break of New York VWAP. This is just inducing any amateurs that are using VWAP, simply put. You never want to buy the first break. You want to buy the retest. So if this had came up, retested, and then as it continues, that's where you want to buy. And you can put a swing high VWAP on, and that's going to swing in somewhere like that. And then that would be your buy signal. So applying that same principle, I would be looking for the market to break this level, retest the New York VWAP, retest somewhere in this consolidation area, and then I would be looking for this leg up. However, that's not my trade, but that is a trade that I would absolutely mark up and study. In TradeZella, you can do this playbooking section, which is really, really helpful. And you can just have all your different setups tagged, and then you can go into reports and you can have different sets of playbooks. And you could see, we can go over this a little bit. This is just my trade distribution by setups, the different setups I tag. First breakout entry, bottom and top of range. Oh, let's close that out. Yep. Yeah, and so this one's actually, I'll go over one of these. This is really good. So if you are in TradeZella and you have this tagging setup, you can do one that's for stop loss and one that's for take profit. Now you can see take profit, I've hit a total of 15K, stop loss 6.5K. So I'm net positive 8K on the year, basically. I'm just tracking one account right now. But the way I use this is if you go down to the summary portion, you can see on trades that hit the stop loss, what percentage of the time are you taking a full stop on that trade versus taking a profitable, where you're taking some profit on a trade that would have hit the stop loss. So I can see I have taken a loss or two losses on a trade that should have hit my TP or would have hit my TP. And that's something for me to note, where was I being anxious in the trade? Was I, pulling it early for something that I wasn't following the proper process? Whereas we can also see on the stop loss side, I'm taking a full stop loss 77% of the time, but I'm also able to scrape out a little green here and there. So this has been, it's really cool to see. And all you do is you just set up the tag, one with stop loss, one to take profit, and then you go under your trades and you just like click in, you go down to setups and you just tag it. It's really simple, really clean, and I like it a lot. So I've got a meeting coming up in a little bit here, so I will leave. I'm not going to leave with any bias because I don't want to give a bias like that. However, I am, despite the edgeful stat I said earlier, I am not extremely confident in the shorts. Looking at the YM, if you're taking shorts, take it on the YM. Don't take it on NQ or ES until this low of day VWAP is broken and held, or at least we're under the New York VWAP, because we're looking like we're recovering. Nvidia is already almost back to its IB high. If Nvidia breaks its IB high, I would be very, very cautious on the downside. Just running through the stock screener again, Microsoft, we're up. Google, it's trying to come up. Google looks very similar to NQ, looks very similar to ES. We're recovering. We're not making new lows of day. Amazon is still bearish. Apple, again, is bullish. Tesla is trying to be bullish. And Meta is still bearish. So for me, that's a 5 out of 7 of the stocks that are above the New York VWAP. So that's giving me a more bullish bias, or at least saying, don't do anything until there is more clarity in the market. I try my best to be on the right side of VWAP. And I think given how much weight that these stocks have right now, where I did it on ChatGPT. I think it was like almost 20% of the S&P and the Nasdaq are comprised of Nvidia, Microsoft, Google, and Apple. Like almost 20%. So that's an extremely large amount of, the index where it's really just these few stocks. So you want to be, in tune with the market. And does the heat map look extremely red? Yes. But on an intraday level, are the stocks recovering? Yes. Also, one more note for me, VIX is very important. Volatility index, when it's up or down 5%, I start to take it into consideration. Anything in between, I don't. We were up at as high as 8% today. So if we somehow came back to 7-8%, now I'm looking for the shorts again. Market's telling me there's some volatility and I would want to be in short. So this was my first live stream. I hope you guys enjoyed this, and I'll continue to do these for my daily recaps.